All right. So maybe we can start. So first of all, a very warm welcome to everybody. Thanks so much for joining in into the webinar. Just in terms of a background, as all of you know, today's webinar is all about life insurance industry in India, how things have panned out, especially over the last 6-9 months, and very importantly for companies and consumers, what might be a future outlook for the industry, both at the company level and what does it mean for consumers as well. Today we have two very eminent people who are part of the webinar, Tarun Chugh, who is MD and CEO of Bajaj Allianz Life, and Barnik Maitra, who is the managing partner for Arthur D. Little in India and South Asia. Before we sort of dive into the meat of the discussion here, uh, one of the things that one wanted to talk about was just how rapidly and how disruptively the life insurance industry in India has changed over the last 6 months. Whether it's omni-channel strategies of companies, whether it's consumer preference to go to aggregator websites, whether it's the demand from the market for new innovative products, whether it is the very rapid disintermediation of traditional physical agents. All of that is springing up a lot of different threats to the traditional strategies that were rolled out. At the same time, it is bringing up a lot of opportunities. So I guess people who can figure out where the industry is going, there is a lot of market to be captured here, right? And overall, uh, India being a very under-penetrated insurance market, there is a lot of opportunity for companies. On the other hand, for consumers, given what has happened with COVID, uh, companies are gearing up to launch new innovative products. There is more pressure on servicing, and at the same time, more flexible payment options for premiums are also coming up. So with that sort of backdrop, let me also say that this is the second webinar in the Benori webinar series. The last one we had done was about a month ago, and that was on EdTech. And hopefully going forward, we'll be able to continue this in a very smooth manner, one sort of webinar every month. What we have planned for today is that we will start out with one quick poll that I will request my colleague Madhurima to bring up just in a minute. And after that, we will get Barnik to give some of his thoughts and expert opinions on where does he see things going. After which we will have a fireside chat with Tarun, and then later on we'll open it up for Q&A. As we are going along, please do keep on typing out your questions in the Q&A box that is there. And if you don't want to type it right away, at least start thinking about questions you want to ask our eminent panelist today. So with that quick setting the context, may I now request Madhurima to please take it over from here, and let's launch the first poll.
Thank you, Ashish, and welcome everyone. Just heading towards our first poll, and I think we want to begin from asking everyone that why would someone want to invest in a life insurance policy or a product? You see the options on your screen. Request you all to vote, and we'll just share, the final results as well. Thank you all. So, we see that security and assurance comes out to be the most important factor of investing in a life insurance solution. And we had run this, poll last week on, some public platforms as well across India. And it reflected similar results of family and security being the topmost, area or important reason. Thanks a lot, everyone. We'll connect again with another poll in some time. Thank you. Over to you, Ashish.
Okay, thank you. So our first speaker for today is Barnik. Barnik Mehta is the managing partner for R30 Little, both for India and South Asia, and is responsible for ensuring a preeminent position for his firm in the region. He is also responsible for building R30 Little's global competence centers in India for artificial intelligence, research, and graphics. With over 2 decades of experience, including 15 years at McKinsey, where he served as partner. Barnik has a proven track record of leadership ability and is also a technology expert. He's also been an investor into startups. He's known to be a Silicon Valley investor, a board advisor, a published author, and a renowned speaker at a global level. So, Barnik, it's a privilege to have you here today. Over to you.
Thanks, Ashish. I hope all of you can see the presentation. I just flashed it before so that we can save some time. So I wanted to take the next 10, 12 minutes to just lay the context of the discussion, which we will get, I'm sure, amazing insights from Tarun later, right? The objective of the session is to cover two simple topics, is to provide an overview just from numbers, right? And we are consultants, we love our numbers, as to what happened to the life insurance industry as it went into the pandemic and as it is now emerging from the pandemic. We are in a different phase of the pandemic, but hopefully in a better economic phase. I'll also give you a little bit of a preview of what we've seen as the industry's response as a lead up to Ashish's fireside chat with Tarun. And then at the end, I'll probably bring one slide on our point of view on what a transformation agenda for the life insurance company looks like. Now with this, let me just talk of 5 trends, and then I'll share some data. And again, would like to thank Ashish and his team at Binori for actually helping us with a lot of the primary research and also data collection for this synthesis. So thanks to them, we've come up with some insights. I think there are 5 very simple insights. I think I'll take 30 seconds to go through each. One is, it is not surprising that there was a significant decline in business since COVID, particularly when lockdown hit, right? And a lot of this happened in Q4 of last fiscal and Q1 of this fiscal. The good news, by the way, is that there are recent signs of recovery, and actually the recovery has started in fact, well before Q3. In fact, there is some good statistics even from Q2. Secondly, we've actually seen, despite the challenges, that the consumers have fundamentally changed their approach and mindset towards life insurance. And I think people believe it's a far more, I would say, necessary part of people's portfolio and their lives as they go forward. In fact, the survey which was conducted by Binori pre this entire effort, 70% of the uninsured reason felt that their reason to buy a life insurance policy only got reinforced due to COVID. So I think that's good news for the industry, because as the industry comes out, there is suddenly a larger base of people who will see the importance of this. I think, as Ashish also alluded to, I think even the structure of products is changing. I think customers want more pure term plans and protection-based products, right? ULIPs may have gone a little bit out of fashion, but they may come back again with what you're seeing going on in the equity markets. But again, there is a subtle change on preference of products, right? I think people have also seen that customers actually have different needs, right? And they need to be innovation in the policy and focus on customer centricity, as you need to do needs-based policy, which is by customers and not a push-based model. And I think, as people say, right, rapid digitization and omni-channel is now already the new normal. I don't think we have to make any fancy plans towards getting to digitization. I think the pandemic has forced nearly all players across this ecosystem and other ecosystems to actually use technology and fundamentally reimagine the role of technology and the role technology plays in the value chain of operators. So these are 5 overview trends. I will just spend 3-4 minutes going through some numbers. And again, we can have a recording of this, so don't need to observe the numbers in detail. Let's start with where the industry was at the beginning of the pandemic. If you look across the board, the industry was in a very healthy high growth phase. If you look at any metric, whether it be annualized premium equivalent or the first year premium collection or even new business premium, you see numbers which are phenomenal. You see numbers which are 2-digit growth numbers, 2-3 times of the GDP growth, 41% growth in annualized premium equivalent, more than 18% growth in first year premium equivalent, and nearly 25% in new business premiums. I think the other interesting part is that LIC was also doing very well, being the government player, where a lot of the growth in the annual premium equivalent was actually driven by LIC. And the private players also didn't do too badly. They did 11%, but LIC 79% was stellar performance. So that's where the industry was when they headed into the recession. I think in a great position for growth, having realized 12 to 24 months of unprecedented growth when the entire pandemic hit. So how did the pandemic actually impact the business, right? I think a lot of players started to see problems from February, March, right? Where in fact players like LIC started reporting a contraction in new business premiums for actually 4 months in a row. This continued. As this happened, I think as with most cycles, right, or with most cascades, right, there was obviously a lot of uncertainty about salaries and jobs, right? So as a result, there were lesser takers for new policies. And in fact, there was a sense where people actually started redeeming their policies for extra liquidity around this time. So the industry actually left or lost from nearly 4 million policies and premiums of 45,000 crores, right? In the industry, and as Tarun will say, March and April are actually very good months because March is a great month for life insurance and April is a good time for non-life corporate insurance. This is when the industry actually shows a lot of growth, right? But given the pandemic, the lockdown and uncertainty of savings, this is the time in which instead of significant growth, there was actually significant decline, right? Of nearly 15 to 30% for both these categories. But I think that's what happened at the beginning of the lockdown because there was a need to push cash conservation and a need to conserve cash and be more conservative. But if you really look at what's happened, and we'll look at some of these numbers a little later, right? I think this has created the awareness in consumers that you need more insurance, right? And you need more insurance to plan for these so-called really extreme exigency conditions, which seem to happen more frequently and periodically now, right? I think life is far more volatile and uncertain today than it has ever been over the last 25, 30 years. And even in terms of why insurance is being used, and I think the poll also talks about it, it's not so much about savings and investment products, but moving towards pure protection and risk-based covers, right? And this we also see in a lot of the customer surveys you've seen, and also anecdotal feedback from players and customers. So what happened in some KPIs? I think interestingly, if you look at the 13-month persistence, I think the industry had a good track record over the past 13, 14 quarters of actually increasing it from 70% levels to over 82%. I think the first quarter of this year was the first time where you see a downward trend, right? Which is not surprising because people were actually conserving liquidity for the upcoming tough phase, right? But again, if you look at the trend on the 61-month persistency benchmarks, they were actually very, very sticky and stable. In fact, a minor uptick, and that actually is not hard to explain because people who paid premiums for 5 years, why would they allow a policy to lapse, right? Where they've already made so much investment, right? And they also see the mindset towards the benefit of the policy. So while the persistence level at the short end of the policies for people who had got the policy a year and a half back was actually lower, right? But for people with the policies at the 61 month mark, they actually did not drop. There was a lot of impact in the AUMs, but that was, I think, a temporary impact in Q4, leading towards the beginning of Q1. And that's again driven mostly by redemptions of schemes by customers to create liquidity, not surprising, right? But if you see some of the trends later, I think this is reversing and becoming better. Finally, on some things like if you look at first year premiums and if you look at renewal premiums, right? First year premiums in general showed a significant decline at the beginning of the calendar year. The growth which you see, the year-on-year growth on renewal premiums also has a far slower growth, right, than other quarters. But I think this is expected, right, and not surprising. I think the most interesting chart to us is the next chart as to what has happened, right, since the first set of the lockdowns began to ease out. If you see starting July, and this is the new business premium, you're seeing year on year for the same month, there has been a steady growth in business premiums. In fact, not steady, I would say accelerated growth, right? July of 20 over July 19 saw 7% growth. August of 20 over August of 19 saw 15% growth. And September of 20 over September 19th is actually seeing a 27% growth, right? If you see probably October numbers and November numbers will also be very good, right? So again, the entire customer feedback and the realization that life insurance is important and it actually adds a lot of value to their risk portfolio and long-term risk protection for their family has increased, and this is seen in the numbers. And in our opinion, the life insurance industry is seeing a sharp uptick in single premium policies, right? Because Again, while you're conserving cash, you still want cover, but which is why you're seeing a lot of uptick. But I think standing now, and Tarun will probably attest, I think the future today looks far more rosier, right, than around the same time last year, when even we didn't know there was COVID, right? And some of this pent up demand, some of this demand is pent up, but in my humble submission, some of this is also structural, and this is validated by some of the feedback we've got, right? I think for insured respondents, I think, which was 60% of our sample size, 70% have fundamentally changed their perception towards life insurance post-COVID, being more positive of the product category, but actually demanding innovative product features, enhanced benefits, and flexibility in payments. I think digital capabilities, both from a point of view of omni-channel, but also in terms of fulfillment, have become far more important as customers have become more digitally savvy and enabled. And then the interesting statistic for the people who are not uninsured, right? I think 74% actually would consider, right, or 70% would consider buying an insurance policy, and nearly 3/4 of them would want to buy it from an online platform, right? And they could actually, they have trust in the brand, right? So they actually would like to go to the brand's website and buy it, right? So again, we are in the midst of something which is unique and structural. While some of the growth people may say is driven by a pent-up demand, but I would humbly submit that a lot of it is based on realization on the importance of this product category. I think several players have actually kept pace with innovation and have also created the marketplace and the fulfillment to meet consumer needs. Ashish, I'm going to spend 2 minutes just talking of a couple of slides on what changes we've seen people do, and then we should allow the master and the expert Tarun to talk about his reflections from the company. I think as we see what's happened. Yeah,
Barney, so you can go on for another 4-5 minutes.
Yeah, I'll take 2-3. Yeah, I think we should also listen to Tarun, right? So see, if you look at what people did, right, and this is classic across most industries, but I think life insurance is one of the few industries where the metabolic rate and the pace of execution was much faster. Classically, everyone shifted very quickly to work from home for their staff, right? There was obviously the tightening of the belt and looking at ways to cut costs. But I think what was remarkable in this industry and this cohort of players is the rapid move to a digital services model, right? And several players actually who may have been digital laggards started executing programs at a fast pace. In fact, I think Tarun's company probably is one of the leaders in the space, right? And they probably already had got these investments in place over the previous quarters, and they probably started seeing return on some of these investments, right? We also saw a lot of, I would say, and this is anecdotal through conversations, but also through what customers have told us, right? That instead of pushing individual products, I think there was a far more customer-centric, need-based selling approach, which is being pushed and adopted in the industry. I think the benefits of this will percolate down to the industry. Industry is already seeing the benefit of this, but if you take a 5-6 year view, I think this is one of the big changes which is going to drive future growths of north of 20% in the industry. I think one of the more important challenges which have emerged is the cybersecurity threat. As businesses become online, I think businesses become more susceptible to cybersecurity. I think life insurance is particularly susceptible given it involves people money. So I think I know a few insurers globally who have actually suddenly started looking at the spending they're doing on cybersecurity and how they are going to revamp their entire systems to prevent attacks. And if you look at some insurers in India actually increased the sum assured for life insurance policies, and also, to be fair, supported their agents who are out there selling, right? So again, some of this may seem like knee-jerk reactions to a pandemic, right? But I think we are very, very positively optimistic, right, of some of the changes, particularly the digital shifts, the change to a more customer-centric product strategy, which is not individual product-based, and the increasing appetite to invest behind cybersecurity as these businesses become more digitally enabled, right, as good trends which will stand the industry in good stead. And with that, we have some quotes on what people are saying. I won't talk about Tarun because we have Tarun here, but if you look at everyone, they're talking of the need for digitization. They're looking for how the entire information and the discovery process needs to change, right? Again, the fundamental fact that people actually believe far more in the product, right? And people have moved to pure term plans. And even from there, there's an increasing appetite now to consider more hybrid products is interesting. So I think before I hand it over to Ashish, I think in general, very positive of the outlook. I think the pace of innovation led by technology in this industry, I think the metabolic rate has increased significantly since the pandemic, which is a good takeaway for the industry. And finally, I think the consumers have also suddenly probably moved ahead 5-6 years in terms of maturity within a couple of quarters, because they've realized the importance of a product like this. And to be fair, the industry has met them more than halfway to actually react to some of these needs, right? But that said, there is still some more work to be done by several industry participants. I think the persistence rates even today for both 13-month and 65-month premiums are below even our IRDA norms. We have examples of players around the world who have 13-month persistence rates at 95, 96%. So I think there is still work to be done in general for the industry, but I think the pandemic has probably already accelerated 3-4 years of progress in a couple of quarters. And with that, let me just pause, and Ashish, happy to hand it back to you to start your fireside chat with Tarun, and we're happy to hand the floor back to you.
No, thank you so much, Barnik. That was indeed a very insightful summary of what's going on. And I guess your points around digitization, and also, and maybe this is a question I'll ask you later on in the webinar, is around LIC versus private sector players, and especially with the impending IPO of LIC, how is that going to change things? And also the point around the structural demand versus the pent-up demand dynamics. I mean, that was another very interesting point that you brought up. And of course, innovation, customer-centric products and other kinds of strategies which are being adopted to make most of the opportunity that is facing everybody. So thank you so much for that. That was really nice. Before I talk to my friend Tarun, maybe I would request Madhurima to bring up the second poll, please.
Absolutely, Ashish. And the next poll that we have is going to reflect on a question that when it comes to the insurers, what are the biggest expectations one has from a life insurance company, especially post-COVID? You'll see the poll on your screens now, and there are options available. Request you to share your votes. Thank you, everyone. You'll see the results on your screen now, and having innovative or bringing into innovative product features is the most sought after requirement or the expectation. And again, linking it back to the same poll we had run last week, it has similar results where innovative products and flexibility in payments came up to be the top two expectations, while I see that digital capabilities are rated equal here. So thanks a lot, everyone. This is really great insight. Thank you.
Okay, thank you so much for doing that. Now, let me just quickly introduce Tarun. He's quite a well-known business executive in the Indian circles, but overall, currently he is a MD and CEO at Bajaj Allianz Life Insurance. A very seasoned industry veteran. He has over 22 years of experience in the financial services industry, including over 12 and a half years experience in the life insurance sector per se. Tarun is a very familiar figure in the Indian life insurance sector, having headed general management and strategic roles as MD and CEO of PNB, MetLife, India Life Insurance Company in February of 2014. Tarun has also handled various responsibilities in sales, distribution, branch operations, and marketing at ICICI Prudential Life Insurance also. So Tarun, welcome. And it's indeed a privilege and a pleasure to be talking to you. I know we have known each other for 32 years, but it really is a pleasure to talk about business and industries and so on and so forth. So,
My pleasure as well, Ashish. Always good to talk to you and get to know each other again after 32 years differently. Right?
absolutely, absolutely. So Tarun, I had mentioned to you earlier, we will do this as a question and answer kind of a session. So really the first question I had for you was around um, what was the state of the business pre-COVID, right? And what have been some of the, what were already some of the structural and the, uh, overall challenges that the industry was facing before COVID happened?
Right. Yeah, so I think that's a good question. Although, these 6 months have been almost like so heavy that a month has been like a year. So when you just asked me that question, I have to really reflect and think back as to what was India 6 months prior. So if I just maybe divide it into two parts, about a year back, all of us were all progressing linearly towards digital. And all of us were moving again. Everything was in a linear platform. We were going towards digital. We were going towards making things easy for customers, looking at customer centricity again in a linear fashion, and progressively, trying to make buying the product easy because our product isn't necessarily the easiest one to understand and buy. But then started the break of COVID, and after China, Wuhan, and then various countries as it started rolling up, all of us were getting concerned. And I think February is the time when we started seeing impact even from the customers. And March, of course, it just came and hit us as a bolt. So the industry writes about 15%, Ashish, of its top line in the last 20 days of the year. Because there's a big tax element. Everybody wants to, close out their financials for the year. There's a lot of renewal premium that is targeted to come then. And all of that suddenly went into a tailspin. The lockdown, of course, we were kind of, in a way, expecting, but expecting is one thing, but when it hits you, it's a different world altogether. And for us, we were a little lucky because or maybe we were proactive. We were looking at what happened in France and happened in Italy. It's happening again now. It's a different matter. But when it happened, we kind of did a recce about a week prior the lockdown. We never knew when there'll be a lockdown coming in. And we actually shut all offices and all branches for 2 days. And we said, okay, work from home. And we discovered lots of gaps. So just to kind of stop there, but basically there's been a move towards digital all this while, but I mean, it's really the last 15, 20 days of pre-COVID that some kind of assessment of what is to be done was kind of working out in our mind. This is no formal process, but it was just kind of germinating in our head.
Right. No, thank you so much for that. So just carrying on with that thread, so one of the things, the strategic imperatives that you guys had already thought about and you were kind of implementing against that was this whole notion of digitization and digital that Barnik also mentioned in his talk, right? And I guess that might have been an initiative which actually helped you once April or second half of March hit.
So it did.
Yeah.
So let me just then move quickly into that bit then. So see, yes, we were all getting digital, but always the issue was the last mile. The issue in our product is last mile. So we whole lot of good things happening. We got digital working out and so on and so forth. And you do smoke tests, you get everything going. It's really the last mile which suddenly popped up and started showing usage of that. So good thing was that we had the entire digital infrastructure. What became complicated in this time was just digital wasn't going to be enough. It was going to be digital and virtual. Now that is a different world altogether. When everybody suddenly So all said and done, even if you were digital, you would, in our case, a lot of sales happen face to face. People would come and still talk to you. They would fill the form digitally, but it would happen, like we're talking right now. So you would actually fill the form with me as a sales guy, and I would show it to you on my tab. But you would ask me the questions face to face. Now you can't suddenly do that. So that's where the boomerang came and hit us. But yes, the fact that we were also, lots of us companies were a kind of digital in various ways. The point was now to stitch up, to get the handshakes together and get this process entire working in front of the customer. There was no laboratory test anymore. You're right there in front of the customer. And I think that's really the fact that we were digital prior helped us. And particularly BALIC, it really worked well for us because we were able to test it real time. We could get things going. We just had about 3 to 4 people in the office, and they were because sometimes you do need to start some parts of batch processes going. So except for that, everybody was locked up and locked out. And yeah, so the shift really came in real time, and it really transited well.
Right, right. So clearly, in terms of your own processes within the company, you were able to almost seamlessly transition from pre-COVID to, I mean, there must have been a lot of issues, I'm sure.
Yeah. So okay, if you want to go through that, I can tell you the kind of issues there were. So
right.
It's just that now I want to forget about them, but yeah, there were a lot of issues. So it's like a day was a week. We used to, every day, our management committee would meet 7 days in a week. We would not bother about the time. We used to say it's a 2-hour meeting, and sometimes we just used to go on for 4 hours. We worked crazily. We a lot of strategic decisions taken. So things like, I mean, if I try to recount now, we had to figure out where the customer is going to be, right? Because you suddenly have to think of a month later, 2 months later. So on that footing, we started talking to consultants to figure out what is happening, and the best port of call was to figure out what's happening in China, and we learned from there. We saw the adaptation of technology and digital in China, which moved very quickly. We saw that as soon as the COVID stopped there in Wuhan, and China was ahead of us by 3 months, as Varnik said, there was a pent-up demand which came in, so we had to get ready for that. The first thing, of course, that was in everybody's mind was employee safety, most critical. If the employees aren't safe enough, we can't feel safe as a company. So all kind of things that had to be done were done. Branches, of course, were shut. Digital pieces had to come in. People were catching COVID. We had to take care of them. We had to make ancillary services available. Call centers were shut because call centers, you can't be putting a phone which is going to be used by somebody else in the second shift. You can't just do that. And disinfection just about started. And were you going to go into a non-familiar territory? No. So we had to actually move telecalling in a box, as we call it, and we moved it to homes of people so that people don't feel unsafe coming to office. Life insurance was called an essential service like banking. But in our company, we basically assumed that everybody is going to work from home, and making that possible was one big task. From a company level, strategically, there were a lot of calls we had to take. You have a plan that you had to work for. We had a cost bit that was already building up, a plan on costing. And the only thing you could control was cost, really. We didn't know what's going to happen to the top line because it was unseen. Nobody's been there. The last the world has been there is 100 years back in the Spanish flu. So what's it going to be? So these kind of questions have to be answered, right? You got technology projects, you got lots of projects, and then suddenly we used to have a long-range plan, and we used to have an annual plan, and suddenly there was a COVID plan which came up, and the must-haves and the good-to-haves had to be taken calls on. So it was just wartime, basically. I think if there was a civilian war, this was it. And we were in wartime. Everybody was taking calls on the fly. It was safety of your soldiers starting first, and then safety of your customers, and then working towards keeping the operations going.
Right. No, I can just imagine what it would have been like in those days. So how long did it take you? I mean, was it a 4 to 6 weeks transition from
Yeah,
100%
yeah.
to 0% back to 80-90%, or what was it?
See, we were a little fortunate because see those 2 days of practice a week prior the lockdown really made a big difference. So our services, our call center took the longest, about 3 to 4 weeks to really get going at about 70 to 80% capacity, but everything else was up and running in about 3 days.
Wow.
We were up and running in 3 days. So because we'd done this practice earlier, because see what happened, Ashish, that we talked to NASCOM, we talked to others, we got PCs available, laptops available on rent, which is not going to be possible otherwise. Just because we had called them earlier, we were able to get them.
Right.
Otherwise, shipping was closed, right? You can get them shipped. Just because the orders are placed and we were following up, we got them. Which other, I'm sure the entire other sectors took a lot of time that they hadn't practiced it. So that worked
Right.
well for us. But if I look at the COVID time, there was a pre-May, before 1st of May, there was one period, then May to July was another period, and then July and after has been one other. And I can now see something November, December coming up. So pre-May was total firefighting, uh, digital to virtual in like 48 hours and up and running, lights on being your concern, cybersecurity being your concern, uh, being able to figure out what kind of customer feedback you're getting. So listening was an important part of it, because you can't, nobody's seen it, right? So you don't know what is going to happen. How's your customer going to behave? So solving for customers, reading from outside of India became very critical. And then therefore to take subsequent actions, because these are large outfits and we have like 12,000 employees. So getting
Right.
that entire thing working is one hell of a bit.
Right, right. But kudos. I mean, in the end, it all worked out with a lot of hard work and blood and sweat. Now, let me just quickly change track and then I'll hand it over to Barnik to ask a few questions. Now, on the market side and the consumer side, was there a feeling of FOMO as well that, there is this great opportunity to grab market share, to expand the market, to get into other segments of the market? So were there any those kind of fears? And if yes, then how did you tackle those? And also, did any unexpected insights come out of your customers' buying behaviors?
Hmm. Yeah. So see, lots of things the Barnick's mentioned quite well, but that's a hindsight, right? So we are talking about what happened then. But
Yes.
largely what we saw as trends were that customers were keeping cash in bank. They want cash for safety. Second, we saw that customers were actually leading digitization and not corporates. Corporates followed, and like I think Barnick commented that it was good that we met halfway. But yes, we met halfway. But the customers are leading, and at this point in time, I always tend to remember what once KV Kamath had told us when we were management trainees, that the customer is already moved in digital. You have it as a company, you have it. But the customer is already buying from Amazon and a Flipkart and used to a certain kind of service. So the customer was ready for it, honestly. And we then started looking at how can we solve for problems that we see. Listening became critical, like I said. We figured out that new customers weren't willing to meet us. That customer behavior came out very clearly. And so we had to go back to the old customer and sell more. So one of the reasons, Barnick, you see LIC doing well because it has a large customer base and people can go and upsell to them. While life insurance companies, the private sector, still building that up, right? So that was something we saw, that old customers willing to meet, and the ticket size from the old customers was higher, from the new customers was lower. Within the customer segments, we saw that self-employed were preserving a lot more cash and didn't have the ability to invest in a 5-year product. So that's a persistency in that segment took a hit. We used to normally have about 70% of our customer monies coming in through physical modes like checks. Suddenly it shifted to 70% digital. And that changed. Our basic concern used to be face-to-face. How are you going to be selling face-to-face? Because that's what life insurance was all about. And that's where the trigger came in to start thinking of innovation. We had to divide the entire process of the way we approach the customer. So from pre-sales to sales to post-sales to servicing, and finally maturities. All of that, and we figured out in each of these verticals, one element, which was something that was a wow experience for a customer and was a clear, safe process available. So for example, I'll talk about one simple innovation that worked for us. We figured out that the customers is not going to see us, but and the face-to-face is not going to happen. So what we did was we just came up with this. We had our Instab, our app, through which we used to, face-to-face show you your products. We said, okay, we will make this screen to screen. So through a link in a secure way, I could actually send you my app and you could see the form that I was filling for you, just the way we are communicating right now. So what maybe Microsoft and Zoom did globally, we did in our own little microcosm through a very secured site. And this is a financial product. Nobody's done it, by the way, even now in India. And you could actually pay safely in that process. You could transparently see what is getting filled in your form, which, Ashish, is the toughest bit in life insurance, the form filling, the brochure, understanding the illustration, those simple things, which you take for granted face-to-face, because I'll be able to explain it, verbatim to you. But that's not going to happen on a non-face-to-face world. And that is, kind of brought us to a watershed. And we are now thinking how we can not just make it screen to screen, but maybe even without a screen that I need to share with you, but you could yourself buy. So that has been a great move. And I must recall and, kind of even acknowledge, Barnik put it very well, that these 3, 5, 6 months have been almost like the way we have moved forward is like 5, 6 years, even from a customer perspective, because the customer is suddenly willing to buy the risk products. Life insurance is a hard push product. My belief is after this, after what I call the COVID moment, we are a slight nudge product and not a very hard push product anymore. Makes a big difference.
No, absolutely. No, that's fascinating, Tarun. Let me ask now, Barnik, maybe 1 or 2 more questions from your side, Barnik, for Tarun.
Yeah. No, so I think I'll ask one simple question broken into 2 parts, right? I think as you sit today, right, with this entire storm behind you, right, what are your real 3 to 5 big priorities, right, going forward, right? As you see, I think this has now become the COVID moment for your business, right? So I think it's a little bit of like grab it or lose it, right? So what are some of the big initiatives you're driving? And the second part of the question is, I think if you spoke to CEOs like yourself 12 months back, everyone would say it's digital investments and all of that. How has your technology investment portfolio fundamentally changed, given that you've already now progressed 5, 6 years along the digital journey, right? And now I think it's a different set of challenges, right? So a couple of questions.
Right. So let me start with the second one first. So see, if I, and Ashish asked that, right? So we've been all investing in digital technology for a long time. And, but if you just conceptually look at it and just step back and look at where have we been investing, about 70% of the investments usually have been in the mid office and the back office. The front office, it's been discretionary investments. You really invest or not invest, because operations usually, when you're going to manage a 20-year, 30-year, 40-year policy and keeping it safely was very important. So so now that is flipped. That is flipped almost halfway. So it's almost 50% of digital investments now happening on the front end, customer facing, and a lot of focus on safe technologies. In terms of the first question you asked me, what are the key elements? I think in a way you mentioned it. I think customer centricity is possibly the most important bit, and I'll talk about it. The second bit is how do you keep evolving yourself as a customer's life goals keep evolving. And the third bit is a push towards data. So if I just take the first one first, customer centricity. I think within customer centricity, the biggest issue in life insurance is trust. And second is ease, and kind of ease toggles with trust, because the more difficult it is, the more difficult you more uncomfortable you're going to feel, buying that product. And this is what I keep telling my team as well, that today the most in the entire financial services, usually the saving account and the FD. Simplest to understand. Mutual funds have done a good, bit as well. So very simple to understand them. Of course, they've been lately been complicated because of so many categories that have been broken in and all of that. So some confusion there. But simplicity. If you understand an FD, you buy it. You do not understand a life insurance product easily, so you push it. So within customer centricity, to get trust and transparency, and while of course service will be very critical, how you are able to reach the customer at the right moment, the most important bit is ease of onboarding, ease of product. Can I, for example, ask you to speak in the way you want, and I can tailor make my offering to you? And that lies in the legalities, that's like in the regulation, that lies in the product shape and form, that lies in the process. So a lot of these things have to come together. So all stakeholders have to come together. The IRDA has been very supportive, and I'm very happy to say that whatever they've been, they've implemented during this COVID period seems to be grandfathered in going ahead. So in the future, that's going to be very critical, because ultimately, all said and done, the big elephant in the room is regulation, and you have to be with it. So that's customer centricity is the first huge pillar. Second is life goals. We are here to interpret for the customer sometimes what is the life goal the customer wants. We worked with a few consultants, and maybe I should have addressed this to Ashish's point as well, that a couple of years prior, when we did our life goals survey, and we discussed with customers as to what were their life goals. So the customers were at that point in time talking about wealth, saving, also just go ahead and figure out, can they set up their own venture? Can they plan their large holiday? Can they go and attend the next Olympics? And those are the kind of themes we were getting to hear from customers. Of course, the child and house bit remain as the two big ones for Indians anyways. Come COVID, we got into listening mode, and we saw what China was doing. And China, of course, flipped the charts on term and on digital. And of course, you can just say copy paste and this will work for India. But you just can't do that as well, right? So you just have to still go listen. So, but it did happen. People were talking of risk, but then there were some issues. Now you're talking of buying a risk product, and there is a medical. Nobody's going to go to a hospital. So a lot of strategic calls had to be taken. We just said, okay, we will not require the reinsurers got very worried, right? So we said, okay, we will not, to a certain level, we will not go to a reinsurer. We will undertake all the risk ourselves. So this became very critical, to align ourselves to the life goal of the customer, figure out how that goal is evolving. And as that was evolving, be able to shape our verbiage, shape our offerings, shape our entire product mix around it, and what we would give. And the last bit, of course, is data. And there's just so much of data available, and there's so much of ways that the customer is giving it to us. And in Bajaj Finserv Group, when I see, because we have an NBFC, general insurance and life insurance, we find actually the best quality data is actually in life insurance. And that is going to talk about the future as to who's going to be the leader and who's not going to be the leader. And that is going to determine the winners in the future. Ashish, I don't know that I've overdone my time.
So we are not going to ask Tarun the tough question of what happens when the LIC privatization or disinvestment happen. I think we'll probably set up another webinar to discuss that, but I think that's going to be the one big disruption people are going to talk about probably a year from now.
You're not going to get much from me on that, because it's
not asking
about confidence.
That is why I was going to ask that question to you, Barnik, and not to Tarun.
I will also reserve my comment on that. Right?
Okay, so thank you so much, Tarun, for that. That was really, really insightful. And maybe before Madhur to roll out the third poll, could I just request everybody to please post more questions on the Q&A window? We only have 2 questions so far, so please post more questions there. And with that, Madhurima, could you please launch the next poll?
Sure, Ashish. So audience, you'll see the next poll question on your screens now. And this is more around, some of the facts that Tarun and Barnik both have highlighted, that how the channels you prefer to purchase or buy your insurance products from, what would be your preference going ahead. Um, Happy to get your thoughts. Please vote. Right. So again, we see here most of it is from the brand website itself. The trust on the companies reflects in the answers. Definitely, aggregator websites are there. This is slightly, today's response is slightly different from what we got from our earlier poll. There, the mix was fairly equal, I would say. We had 46 and 49% across both. But yeah, happy to get your thoughts. Thanks a lot.
I think Madhurima, for life in general, I think people prefer branded websites. I think given the
Trust factor is much larger, I think, and as Tarun also mentioned.
yeah, for travel and shorter term products, I think websites are, anyway, in my experience, but yeah, I think there is a return to trust in brands, I think, in COVID, right? I think we're seeing it across sectors.
Actually, my 2 bits on that, Barnik, would be that I think India has been unique because the term in the direct channel, in the online channel, has been kind of been taken over or led by one player, just Policybazaar. So the web aggregator space, therefore, if you remove a Policybazaar, there's nothing really.
There's nothing.
So that's what led it. You're right, we should go live more with the company websites.
So actually on that, maybe I'll just ask a impulsive question to both of you, and but especially to you, Tarun. Do you see the likes of Amazon and Jio getting into financial services, and then they creating something like Policybazaar?
Actually, it's quite possible, Ashish. It's very possible. It will finally be decided by data protection law, if you ask. Because what Policybazaar is invested in its brand and processes and learning this for the last so many years. What Amazon and Jio have is data. So if they're allowed to mine the data, and I don't think there's much of an issue there, honestly, because it's their customers. Yeah. As long as they're allowed to mine that and be able to work on it, it is a matter of time that they will be able to use that capability. And both these are very strong. One is an established world major on this capability, and the other is somebody who we know will be able to buy or build this capability quite effectively, and is working on it already. So yeah, as long as they're able to make their way through the data protection law, they will actually use up the market, if you ask me.
So can I give a contrarian view to that, Ashish, if you would like? Right?
Yeah, absolutely.
Coming from serving over 50 telcos in my life in 30 countries, right? I think they would be a little foolish if they tried to do this, to be absolutely honest, right? Because see, listen, these businesses have really, there is not a single telco in the world who's created a single adjacency successfully at scale, except for maybe 1 or 2 media assets, right? We are actually seeing the emergence of an interesting collaborative model called telco insurance, right? In which the banks actually open up their data to a telco player, to an insurance player, for the insurance player to make investments in the banking data and use the banking data to create new products, reach out to new customers, right? And then effectively create a custom channel, right, for the telcos, right, to sell this, right? And that's, we call telco insurance. We are seeing Vodafone doing it in a few markets. We've actually done it with Vodafone. We're actually seeing a few insurance players in Southeast Asia get together with us to do it with telco providers. So I think a good solution for this problem is for telcos not try to do it themselves, but to actually work closely with insurance players to create this. That way, both parties create value for themselves, versus if telcos try to do it on their own, they'll just destroy value for everyone, right? So that's my humble submission. I hope they don't try it, but I hope they try telco insurance and not try to win this whole business themselves.
And interestingly, Bharti
from a manufacturing perspective, Ashish, I mean, I just hope Barnik is right, because from my side, I will always think that as a big manufacturer, if it comes alive, then we're all in trouble and we need to find a way around it.
Sure.
Yeah, but I think, Tarun, there are very few tricks left. I'm just saying you can't do it every 2-3 years, right? I think so. There are so many other spaces. I think there's battleground on payments. There's battleground on video and OTT. This is not really a priority one battleground yet, right? So I think it's probably the onus is on you to preempt people from doing this by offering this as a solution or a way out, which makes your business more healthy in the long term. Anyway, unsolicited advice.
Yes, very, very useful.
Once a consultant, always a consultant, Taru, unfortunately.
What habits I have.
So we have a question from Neeraj Joshi. The question is around the future of work. All right. So let me maybe tweak the question a little bit. And Tarun, would love to hear your thoughts on this. What do you see the future of skills in your industry, and what kind of people you are hiring these days? I know you've hired some people from Plaksha University, data scientists and so on. But if you were to do a skill map, what will be your the desired skill map in your organization over the next 3 to 5 years?
Honestly, Ashish, the skill map, if in terms of numbers you would see, would still skew to nothing very different from what it is. In terms of sheer numbers, when you hire. Because all said and done, there is a face-to-face business that is there. Of course, is now using technology very well. But then India is so undiscovered as yet. So there will still be a significant part of it. But at the same time, the skill gap comes in when you want the specialized skills. And that is where data analytics, people ability to be able to decipher data, develop data points, be able to figure out actuarial models, be willing to handle risk differently. I think there's going to be a big issue on the way reinsurers are behaving today. And I think there's an opportunity on the risk side. And it's an unfathomed market. We don't know what's it going to be. So that is we would want risk specialists in a big way. And there are none in the market. Most are banking, credit analysts and risk analysts there. But there's nobody who can actually do a risk mapping for 10 years, 15, 20 years. These are this 10 months, 15 months kind of risk analysis. So that is where it's going to be unique. The skill gap we see in the kind of investment scenario that is possibly going to unfurl now. There are so many other avenues that are popping up. So many products which are forcing us to look at guarantees. So how do you price a guarantee? How do you control a guarantee? So those kind of risks are going to be difficult to find. But in terms of numbers, we're still going to be continuing to hire in the direction we've always been.
Right. No, very, very, very interesting. Now, there is a very interesting question from somebody who hasn't given their name, but the question is around premiums. So on one side, obviously, you have, let's say, technology-led further commoditization of life insurance as a product. But on the other hand, you are able to access the 50 crore people in the country who have access to the internet, right? So the pie is just increasing. So where would the premiums finally settle at? I mean, would they go up or would they come down?
Yep. So let me put it in perspective to your anonymous answer seeker rather here. So the point is, if you look at the way premiums have been, if I was to just kind of draw a graph virtually here, premiums used to be right here, and they've actually tracked down all the way down to 2014, and remained flat then. and now started going up, because now is when the cycle is really coming true, and it's getting priced in. So I do expect premiums to actually go up a little bit even now, to price in for all the stuff that's happening. For example, we're seeing a lot of COVID deaths come up here. We're seeing a lot of fraud come up in COVID. It's very difficult to track because you don't want to keep the legitimate claims because of the COVID fraud that we're seeing. So that bit has to get priced in, and it will increase premium slightly. But overall, if you look at it from the entire way it's moved, it's far cheaper to buy in India than in Singapore.
Right. Barnik, do you have any perspectives on this?
No, I think there will be increase in premiums in the short term because of COVID getting priced in and the impact of COVID, right? But I think I have a view, and I have not done modeling on this, but if you take a 5-10 year view of this, if the full insurance base actually grows, right, and actually have younger people buying life products, right, I think the risk probably gets amortized over a broader, healthier population, right? So structurally, premiums should stay at this level, if any actually go down slightly if you take a 5-10 year view, right? But that again, assuming there's no such black swan event like COVID, which seems to happen now more frequently. But I'm far more positive on premiums staying at this level or structurally coming down slightly, just given the adoption of the product, right? But yeah, COVID itself is already causing premiums to go up, and premiums will go up in the near term, at least a bit.
Right. We also, and I know we are past the hour, but we'll probably just go on for a few more minutes and then we can wrap this up. So a very interesting question coming from Lauren Doucet. He's with Roland Berger. Hi, Lauren, I checked out your profile. I think you are a partner with Roland Berger in Hong Kong, right? So I don't know whether you can talk on this webinar, but the question from Lauren is, especially in India, I guess, the valuation of life insurers is quite overheated. And that's the word he uses, 40 times earnings. Is this going to further expand? Is the multiple going to expand, or some sanity will come back?
The PE is not a listed company, but I am an ex-investment banker and I used to specialize in this stuff. My 2 bits on this is P/Bs are not the way to look at insurance. It's always P multiples. Because the earnings that you're seeing today, the way our PAT works, so there's no point looking at PAT, Lauren. It's very different. It's not like US GAAP. This Indian GAAP basically makes you can't DAC anything in India, right? Like you can US GAAP. So in India, what happens is that your PAT reflects almost as much as you grow. It becomes negative. So I have to put all the strain that will possibly, I have to price in the strain for the future right up front. As a result, if I'm actually doing well in terms of growth, P/E usually would be high if you expect high growth. So my PAT is actually subdued if I'm growing faster, as for Indian GAAP. So that P/E won't be the right way. The way to look at it is EV multiples. And yes, EV multiples are currently high. Now, I would say they are high for the right reasons. And that is likely to tone down more because of the growth of the NBVs. That is the EV of the company is going to grow up, simply put it, largely because of the move towards term plans. The maximum EV, ROEV you get, the return on EV is when you do more risk products, as you know. So we just about started that journey. That market is going to explode. My call is it's going to be 4 times in the next 10 years versus where it is today. So that is what is getting priced in. And you'll see that whoever is selling more and more risk will demand that premium in terms of.
Barnik, any thoughts on this?
No, see, listen, I completely agree with Tarun. I think there is obviously a growth premium attached to any high growth sectors, and this sector has shown the ability to grow at 20% plus, right? And even if you look at, and I completely agree, PE is the wrong metric for this industry, but any such sector which shows 20% plus growth, we used to have this rule of thumb metric, at least when I was an intern in Goldman nearly a couple of decades back, called PEG, right? Your P ratio should be equal to or a multiple of your growth, right? So I don't think they are overheated yet. I think it reflects a positive outlook of analysts and investors in the industry in general, right? I think it's an endorsement of all the effort the industry is taking, and just a simple understanding that the potential of this industry is just at the beginning of point of capture. Right? So I don't think it's overheated a lot, right? I think we will see, right, that it'll probably get even more overheated or even more pricier as we go along the path. But it's an area to invest in today at today's valuations versus going short.
Right.
If I can just add one more thing, Ashish, about Barney, and suddenly is that the companies that are listed are the stronger brands. And one bit that I didn't mention in my discussion here is that we are seeing that brands which are more trustworthy, and Barney mentioned it in a way, are going to get more claims. They're going to have comfort. Usually it's a flight to safety, right? For the next couple of years, you would see a automatic benefit coming larger brands. They already see market shares going up, which is the price. But yes, money is easily available today. So if markets are heated, it's a different discussion there.
Right. Right. So, I think this is just so interesting. I wish we could have continued. But there is still one more question, which is really a very, very interesting question. This comes from Yash. He's saying, he's asking rather, how far are we from mass adoption of very personalized premiums and policies in India through leveraging wearable technology, by constantly tracking systems and wearable technology? Is there anything that you guys can say to this?
So we are a little far away. So I think on this bit, the sector and the regulator haven't really worked well together yet. I will concede that point. I think the GI and the general insurance industry has done a better job of that. I think we've not been able to price it, and the regulator through its sandbox. So the regulators come up with a sandbox possibility. And before I go to that, what you should understand about Indian regulation is that once you fix a premium, you stick to that premium as per regulation today. What we need to do in a sandbox idea, sandbox is where where the regulator's idea is asking you to try something out, and then if it finds it good, it'll approve it. So currently bringing down of rates hasn't really been approved by IRDA, but it's a matter of time. It has to be done because that's where customers would want it. And I think the test bed is the general insurance industry. If that goes well there, of time insurance.
Right. Barnik, any words of wisdom on this?
Again, being a little bit coming from the AI side, I'll just look at it a little mathematically, right? I don't think yet I have seen any research which suggests that the additional data from wearable tech is going to make your predictability of your actuarial models better, right? Till someone publishes some good research papers on it and proves that your actual models get more precise. I think this is a little bit like down the rabbit hole in Alice in Wonderland, right? So let's wait, right? And see a little bit more data and science behind the data, right? And then we'll see. But I think, to be absolutely honest, I think there will be far more benefits in other sectors of insurance, right, than life. I think life will be the last hit if this is proven to be significant and statistically insightful, right? Which in a lot of cases, often it is not, right? I think you don't get an ROI on this investment, right? Just because you have 10,000 more terabytes of data doesn't mean your models become more accurate, or they may become more accurate by 0.01%, but is it really worth it, right? So.
Right. No, thank you so much. It was a fascinating discussion and a fascinating webinar. But before we wrap up, just some housekeeping points. One, Benori and Arthur D. Little will be publishing a white paper on this topic and this discussion that we had. And of course, we will be publishing these on our various media channels. But on top of that, we will also ship out a copy of the white paper to all the participants. And before we wrap up, just wanted to request everybody to fill out a quick feedback form. It's just three questions. So that will just come up on your screens in a moment. So with that, thank you so much, Tarun. Thank you so much, Barnik. It was indeed a pleasure and an honor to have you with us today. And we just hope that in the future, we are able to engage again on some other forum. Thank you so much.
Thanks,
Thank you,
Ashish.
Ashish.
Thanks for doing a terrific webinar. Thanks, Tarun, for your insights as always.
Thank you, Barnik. Great to have known you. I think let's just connect on the other side as well. Ashish, known you in different roles, never seen you as a moderator and moderating me. Great to see you again.
Okay, thank you. Bye then.
Thank